trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. This is the Dow Jones, folks. You'll notice that we took out the high by just 5 pips at our 50% retracement, which was the major ABCD. You remember on Monday, we came right down to our buy point right here. Here's what I was doing last night. I was waiting till the report, except I had to sell this one. I'm sitting right here at this level, which was a perfect 786, just right on the money here. I put a stop in here, and it's the first time I got a bad fill. I was risking 100 points, and they took 120 points, so that was a $600 loss. We also had a loss in the gold. We had a beautiful ABCD Gartley up here. Hold on one second. We'll get it up here. There was our number right here. We took a $6 loss in that one, and nothing you can do about that, folks. I have the orders in there. And then also in the one that I like the best, which was the Treasury bonds, everything changed in a matter of seconds because we were selling it right here. Our stop was right there. And, folks, believe it or not, I got a 10 handle or 10 tick slippage on it, so that was also $600. So this was a pretty big one. So anyway, things change when the Fed's out there, so we'll see what happens as we go through some of these. I'm waiting for Rich Anderson to come on because I think Rich is in house. Rich, are you there, my friend?
Yes, sir.
Okay, tell us about the what's happening with the grain report. I see that the soybeans sold off a little bit, but they've bounced back a little bit here so far this morning. So what do you think's happening?
The soybean report was a real yawner. Not much happens in this report. The big report is on June 28th. That's the stocks and acreage. That's when they change the stocks and acreage. That can, cause big surprises in the markets. And that today's numbers were almost identical to the guesses. Slight changes. I mean, the story that the traders are following is that Russia's estimate of their wheat crop is much lower than what the USDA's is, and that's true of Argentina and Brazil, but the USDA is not recognizing that. They may do that in the June 28th report, but it's a non-event. I think that the biggest event going on today is that, there's been a couple of flash sales of soybeans from the Chinese. Well, that's because the Brazilians changed their tax policy on beans, and our freight rates to the West Coast, the PNW, Pacific Northwestern, is cheaper, so they're buying a few beans. There's just not much exciting. The weather, we do see some weather, 10 days out, that's going to be fairly hot, and the eastern corn belt is dry, and the western corn belt, like Minnesota and, that kind of area, we've got a lot of moisture, so there isn't a crop story yet, but I look at tells. And like July, corn is starting to gain. That shows you that somebody wants to actually be able to access some grain into July. The July-August soybeans spreads are starting to show some strength. So, the users, the professional traders are starting to do some accumulation. The funds that are heavily short, nobody's excited or worried, but that can change fast if we get this hot weather they're talking about, and then especially if no rain shows up. The jet stream's too strong right now to show any bridging, but that's something you look for around the 4th of July. The peak need for moisture in corn is the middle of July. By then, we'll know what the crop's going to be. So I'm just sitting and waiting. I thought the charts looked great on the corn and the wheat. I think that's where the opportunity is going to be. The market's movement this morning after the Fed number, and by today, by the way, today's the first time since 2020, I think, where the CPI and the Fed meet on the same day. But it's all about expectation. At the beginning of the year, they're thinking 6 cuts, and there was no cuts, and now they're talking 2 cuts. I think they're more focused on employment. Globally, I mean, you've got France's GDP versus their debt is 112% of GDP. Their spread between the German bonds and the French bonds is wide. There's all kinds of elections going on and things that are changing, not to mention our election in the fall. So you've got to be sensitive to all that.
We have an election in the fall here? What is it, a congressman or something, or what? Oh, anyway, let's not.
For all kinds of things, and it'll be very interesting to see what happens.
Amen to that. Rich had one other question. You and I have been together trading for 50 years. You know that, my friend? And have you ever been in a year?
I know. You've been my mentor. I'm lucky to be with you along this whole trail, and I just got lucky. Yeah. What can I say?
Yeah, I got lucky too. The first year I mentored him, and the last 51, he's been mentoring me. Rich, have we ever gone through a year where we don't have at least 1 or 2 major crop scares in the grains? I can never remember one.
No, it's going to happen. I'd be shocked if it doesn't. There'll be 1 or, I mean, right now we're talking about whether maybe in the rain forecast for the Western Corn Belt, which would be Minnesota and places where I live, they might get too much rain. They're talking possibly 3 to 5 inches.
Boy.
There was some prevent plant, but we won't know how much until June 28th. But the machinery is so big these days that you can get so many acres planted in a couple of days. It's not like the old days. The one thing I'll mention this morning, you talked about the markets move quickly. Well, in the electronic markets, once that report comes out, all these bots, all these computer programs, they're looking for keywords, and then they automatically put orders in, and they can put orders in faster than you can blink your eye. Yeah. And then if the market moves to the price, all of a sudden there's a vacuum there in the market, and that's why I prefer not to trade with stops in front of reports, because you can get run. I don't think he got run by very much today, but there can be a day when all of a sudden the sellers just disappear because the computers just cancel the orders faster. You just can't move that quickly. It's a different world than it was when we were trading against the pit.
Is that probably what happened in the S&P today when it opened? I mean, it was
absolutely. It's all these computers, and they one change. They all are based on keywords. Before you even have a chance to read the headline, they've seen a keyword and they're changing their orders, and you can't blink that fast. And that's just the reality. That's the marketplace that you're trading in on the short term, and it's different than the old days. It's completely different.
Okay, listen, thanks for joining us, my friend. We'll have you on again soon, but the great information as always.
Thank you. I was thinking about it today. You're really an evangelist with your keywords, at the end of every one of your broadcasts, attitude, gratitude, and may God bless. So you take care.
Yeah, that's Tony Robbins. You bet. We'll be back, folks. We've got Stan Harley coming up the break. We'll be talking about some of these markets when we come back. Stay with us, please.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I want to talk to you about slippage here. This is where we sold the bonds yesterday at 24. Okay, our stop was right above here at 03. We got filled all the way up here at 11, so that was a pretty big slippage. It was about $578. It should have been $300 and some dollars, but that was a slippage. On the gold, let's just get it up here. It didn't have any slippage at all because we had our number right in here. We'll just move this over, you'll be able to see it. We sold it here at 43 right here, and you'll see it was on its way up, but it stopped and backed. Well, this is a 30-minute. Let's just get the smaller one. You'll be able to see that there. See, it was on its way up here. There was our number right here, and we did get filled right at our number here, which was at 49. We sold it at 43, which was right there, and we got filled here right at 49. Actually, then it backed off a little bit, and this is what it's been doing, since that time, which has been a pretty big move to the upside. Okay, that I just wanted to tell you that because you do have slippage in some of these markets, and you do have losing days. Now, this is the first time I've had 3 losses in a row in a matter of seconds, but that's the name of the game. Remember, we covered the short from 10 days ago in the Dow Jones on Tuesday, right at the bottom. So that was a monster win. So we're still having a good week, except today's not a good day, as they say, Billy Ray. It just isn't. It might end up that way, but who knows? I do want to mention one other thing. We got some of the money back because of the things that we mention here as we teach. Let's get back to this Dow Jones, okay? There's the Dow Jones. Now, look. When you have a big move down like this, the first thing we look for, we'll just get back and go up to the 8-minute chart because you'll see it here. There's the big move down. The first thing you want to look for is what? You're right, Johnny. It's 382, and there it is right there. You can see there's just about perfect right up here, 39.50. And look at this. It's been down the whole day. Now, this was a pretty good drop, folks. This was 200 Dow points. Now, stop and think of this. The Dow Jones is dropping 350 points, where the S&P is off looking at the stars on Spaceship Enterprise or something. And what do you call it? The NASDAQ, that's in a different, galaxy. So that's why I don't touch that one. Anyway, that's what we're paying attention to here. But let me show you why. See, this is telling you something. This market is relatively weak because at this spot right here, okay, we should have had a rally and we didn't. It kept going lower and lower. So what you want to watch for is watch for the next 382 rally that would match this one. And that would bring it in right up here at 39.16. And there's the first 382. There would be the second 382. Now that's only 70 handles from where we are. 70 points, not 70 handles in the Dow Jones, but by golly, that's a pretty good shot because it's right at a 382. It's certainly, look at this. I mean, this is a tremendous move. Look at this thing moves before it even traded. It moved 150 points. So it's been the weaker of the group. And of course, the Russell, I've already pointed out the Russell, what it did. So those are the ones that we're watching closely here. I'm anxious to see if we have our friend Mr. Stan Harley coming up, if he has anything that maybe today's a key day. It might be. I don't even know. What is today, the 11th? Hey, this is no, today's the 12th. This is Zanie's birthday. I'll be darned. Sarah's little grandson is 5 years old today. Is that kid smart? Let's look at these bonds on the daily, because I want to check them with the see, there was our original target on this thing. And you'll see we haven't got there yet. Let's see what the notes did, because that's the bigger market. It's 6 times bigger than the Treasury bonds themselves. So we'll get that up here. Put the daily up, and we'll take a quick look at that. And we haven't even made a higher high yet, but we're getting awfully close. We're back to the same number. There's a high again at 110.85. That's that ABCD on the big one. These are exactly the same highs. Let's double check that. The high on that day was 110.21. The high today was 121.5. Made a higher high by 1 tick. So I don't know. Who knows what happens in the affairs of men, but pay attention to it. That's all I can say. This was a big surprise, folks. I don't get surprised often, but when I do, I bite the bullet and move on to the next one. Okay, let's get on here and show you another one that I was really wrong about, but I was right about it for about 24 hours. That was a little tongue-in-cheek joke, folks. I don't trade this, so here is the Apple, Mr. Appel. Oh my gosh, it's up to 16 now. Remember I said how much symmetry there was here on these moves? This move was 33 days to the upside. This one was 33 days to the upside. They were just perfect, right? And what does it do? It backs off for 1 day here, and then this is when they had their little party. And look what's happened. It's made new highs off into the stratosphere. So very, very interesting to see that happen. Boy. But see, once it went above 200, if you're looking at this at 198, all right, 2%, 2 points would be 199. Once it gets above this, then this pattern is no longer valid because it's a day off. But look at this strength here. You can't fade that. So that's why you got to use a stop when you're in here. Sometimes if you don't use a stop, folks, you're in deep trouble. That's all I can tell you. There's just no other way around it. Hold on 1 second. I need to take a little bit of water. Okay, now let's move on here. Okay, someone had a question about the wheat. Let me get the wheat up. I just bought some wheat just a few minutes ago. Hold on here. I'm looking at Christmas wheat. Okay, here's the daily. Okay, now 3 days in a row, it's hit a low of 655. Okay, now I just bought it at 659, and I'm just going to put a stop 10 cents under here. I'm going to become a farmer, and I'm going to put my stop at 649. I really like this pattern. And I tell you what, folks, look at this. This is a 61% retracement of that low right here. And if you take it from this low right here, it's just a tiny bit off of the 50%. Okay, now the one other thing we want to check is to see what the 1.618 expansion is. And it's probably, it's going to be, it's right there too. So, boy, if it doesn't hold here, it doesn't deserve to be owned. That's a guess. So you just put your stop down in here, take a little look at it. It's what I do. So I don't know if that helps you folks, but that's what I'm looking at. But I'll tell you one thing, I haven't gone through a growing season where we don't have one or two scares. And, boy, the stuff that's going on there, political stuff, is a little scary. So let's remind ourselves of that, okay? Very, very important. All righty. I think that was basically what I wanted to cover now. Let's see what the clock on the wall says here. Probably got a minute and 20 seconds. Okay, we wanted to look at, someone asked to look at J.P. Morgan. Also J.P. Chase. Sorry, J.P. Looks like it could be this one. And this one's actually acting pretty badly today. It's actually down with the rest of the market up, but it's getting ready to be, it's in a pretty good buy mode right here, because if you look at this, you're right at a ABCD Gartley, almost, the 618 comes in just a little bit lower right in, right there. So that's at 190, so I'd kind of watch that, but you got another one right here behind it. That would be interesting too. There's the ABCD. All I do know, folks, the gap that we're looking at here in the S&P, it will be filled. We've never had a gap that big, and this is the biggest. So whether it'll be in my lifetime or not is the $64 question. Stay tuned for Mr. Stan Harley, the Harley Stock Market Letter. Up.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Kickstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Folks, we have Mr. Volatility in the house who told us a couple of months ago this market has not made its new high. And after looking at the chart today, I bow in homage to none other than our good friend, Mr. Stan Harley. Stan, congratulations. I'm eating humble pie with a lot of garlic like I usually do. So what are you looking at, buddy? Tell us what we're looking at here, pal.
I've had my share of pie in the face. We all have. It just goes with the process. It's part of the deal here, being in the biz. Imagine being in politics, Larry. Oh my gosh.
I don't understand why people do it. Why? You can see why they do it. But anyway, let's talk about something fun. Let's talk about the presentation for Mr. Stan Harley today.
Absolutely. Let's start off with one of our favorite topics here, the stock market, shall we? And I'm just kind of continuing with my theme. I think we're marching along here to what I believe is going to be a major market peak at the back end of this year. We're not there yet. We've still got lots of bull market to go. I call it the bull market express, but we're chugging on and got some structural work to do between now and the end of the year, but I'll see if I can define it as best I can. Let's first of all take a look at the monthly chart. And I updated this just moments before we went on the air. This chart goes back over 100 years. And as you and I have discussed on the air many times, I have a fondness for examining the Lucas number series and the multiples thereof. A lot of folks look at Fibonacci. I use Fibonacci, but boy, I found Mr. Edward Lucas, the French mathematician, brought us a wonderful gift here. So I focus a lot on the Lucas numbers and their multiples, and I find that these are very powerful tools in defining the structure, the time counts between highs to lows, lows to highs. Primarily, they best work in defining high to high and low to low patterns. To a lesser extent, they also work from high to low or low to high. But the takeaway is Lucas numbers and their multiples, by my research, are very powerful tools. All right, with that as a backdrop, here's a chart of the Dow Industrials going back over 100 years. And I put my little table here in the upper left-hand corner. The first column is the Lucas number series. And then the next two columns I multiplied by 2, by 4. I also divide by 2, but I'm not going to talk about that in today's discussion. And note the time counts between the prominent highs and lows. For example, between the September 3rd, 1929 market peak and the January 11th, 1973 market peak, that was exactly 520 months, which happens to be within 1 month of Lucas 521. If you go forward from there, from the Jan 73 high into the Jan 2000 top, that was 324 months, which is just 2 months, within 2 months of Lucas 322, and so on. And what I found is all of the major peaks line up just pristinely with the Lucas number series and their multiples. And when I spin it out, when I take the numbers from all of the major tops added to the 1929 top, and I've done that right here. So when I take Lucas 521, which is this time span, Lucas 94, which is this time span, add each of them another 94, 76, 36. That's 1,143 months. When added to September 1929, that equates to December 2024. And here we are in June. So my takeaway is December, plus or minus, could, not saying it will, but I'm saying it could mark a significant market peak. And that's the thesis that I'm marching to right now. Let's look at the weekly data, see if we can distill this down a little bit into the next lower time frame. Here is a weekly chart going back a little more than 40 years. And if I put my centroid right here with the March 2000 high, and I count both backwards and forwards, Lucas numbers in weeks, not months, weeks, note every single peak, every single one from that March 2000 high is within 4 weeks. of being exactly a Lucas number or its times 2 multiple. And when I add them all together, I come out to the first week in November of 2024. So my monthly work suggests December 2024 plus or minus, and the weekly analysis also presents a very compelling case for a significant high in the first week of November plus or minus. So, and that November is certainly within the plus or minus of the December on the monthly counts. So when I put it all together and put a ribbon around it, right now, as you and I speak, the evidence to me is very compelling for a significant market high this November, probably right after the election. And we also have a 2-day Fed meeting immediately after the election as well. I think the high occurs that week. That's what I think. And if it doesn't, it's your fault, Larry. Oh, I think we may have lost contact. Oh my gosh. Oh, we're still there. Okay. I thought perhaps we may have lost contact. Now let's go to the next chart, shall we? This is a weekly chart showing the dominant cycles as measured trough to trough. And this is a slight refinement of what I've shown in the past. But nevertheless, it shows all of the significant lows going back to 2018. And my analysis says that the low we had in April was probably an important low in the cyclical series. And the next one is due in early October. So we're now in the process of marching higher. However, having said that, something's wrong with this picture. That is, the S&P and the NAS are moving higher, but the Dow Industrials and the New York Composite indices are not. So we're kind of in what I call a bifurcated market at the moment. The NAS and the S&P pushing a little higher, Dow, New York Composite, not so. So we've got some catch up to do. I think that's coming very soon.
That's our cue for lost internet connection here, folks. So I'm doing this off the phone. That's our cue for a little bit of commercial. Stan will be right back with us. Stay with us, Stan.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Back, folks, speaking with Stan Harley. Stan, please continue.
Hey, Larry. Thought for a second we had some issues. I understand you have some connectivity issues on your end, but we're all systems go here on mine.
Well, no internet here, so just go right ahead, my friend.
Oh gosh, I know what happened. I know how that can affect your day. Well, and continuing with my theme, I believe, as I said, we're on the roll towards making a major market peak. But in the short term here, we've got the S&P and the NAS making new highs. Not so with the Dow Jones Industrials or the New York Composite indices. For me, I like to see what I call, I track the big 5 components. For me, the big 5 are the Dow Industrials, the New York Composite, the Dow Transports, the S&P 500, and the NASDAQ Composite. And I want to see all 5 of those components, and to a lesser extent, the Russell, in gear, either going up or going down all at the same time, making new highs at the same time. So when they're not, then I kind of need to drill down and see what's going on. Is it temporary? Is there a major top developing, bottom developing? Well, we've got something like that going on right now. As I said, we have the NAS and the S&P in record high ground, not so the Dow and the New York Comp. So what's happening here? Well, I think we have just a little bit more structural work for the Dow and the New York Comp to undergo before it's all systems go. Here is a chart of the Dow Industrials. This is a chart I've shared with you and the viewers frequently. It's an update. It seems to be still tracking right on the mark. The dominant cycle on the daily chart tends to fluctuate about a nominal 53 trading days. And there's some math that goes into that, but just for the sake of easy explanation here, let's go with that, 53 trading days. The last occurrence of that cycle marked the April 19th low. It's due again by my analysis the last week of this month in June. So what I think is likely to occur, you can see this chart of the Dow that I ran off just minutes before we started the interview. It is underneath its 15-day moving average in green and its 50-day moving average in blue. So I think we're going to probably chop sideways to modestly downward and make a low in the Dow in the last week of this month. And then at that point, I think it'll be all systems go for the bull market express to kick back into gear. And I think you'll see all 5 components start rocketing higher from that point. My next targeted high is later in the summer, perhaps at the end of August, just ahead of Labor Day. But between now and then, I think you're going to see a rip-roaring bull market.
Well, they're ripping and roaring today. That's absolutely sure.
Well, yes and no. Well, look at the chart of the Dow. Not so.
I happen to be short the Dow. In fact, I've said here, how can I be short this when everything's going up, but it's working? So I just don't stand. Is it still going down? Because I haven't seen anything for about 10 minutes. So it's okay. It doesn't make any difference. Stan, I want to thank you for being our guest today. We'll have you on again soon. You've been so good to come on the show and talk to us about this, and you have been flat out spot on. So we really do appreciate that. And I'm beginning to believe that Mr. Fibonacci must have swirled away something from Mr. Lucas. Lucas must have been in the Egyptian pyramid at the same time, I guess. I don't know.
Well, Larry, I know you can't see the screen, but I do have another chart I thought I'd share with the viewers before we concluded, if we have time.
Please do. Yeah, go right ahead. Yeah, I can't see anything. So, just keep, you've got another 5 minutes. Go ahead.
Sure. I thought I'd address one more topic, kind of a little bit away from some of the things that you and I discussed on the air in the past, and that is used auto prices. This next chart is the Manheim Used Auto Index, and this data can be retrieved online by anyone. I take the data, download it, put it into a spreadsheet, do a regression analysis of the data, which is a mathematical technique for finding the best fit to the data, and I found very compelling evidence of a cycle that nominally spans about 68 months. That's about roughly 5.5 years from low to low. And as the viewers can see, I know you can't see it on your screen at the moment, but we've made pristine lows every 68 months like clockwork. We recently peaked out here a couple of years ago, and auto prices now are heading lower, used auto prices. And my analysis suggests the next 68-month cycle in used auto prices is due to recur in about December 2025, so about a year and a half from right now. So if one is shopping for a used car, and if one can wait for about a year and a half, I think the better deals are going to be found at the tail end of next year, not today.
Wow. Very interesting. I've never looked at a chart on used cars or anything like that, but certainly if it's got numbers on it, it can be put on a chart, that's for sure.
If it's got numbers, it can be put on a chart.
I noticed while we were on the air, and before I got off the air here, I was checking the transportation, and all it did was make a 382 retracement this morning, and it's been selling off all morning. I mean, it's still quite weak compared to the rest of the market, isn't it?
Yes, and as I was talking earlier about the big five components, the Dow Industrials, the Dow Transports, the New York Comp, the NAS Comp, and the S&P, the transports and the Dow Industrials among the big five are laggards right now. The transports have not significantly broken above 15,000 in more than 3 years. They get above and then below, above, below, above, and below. But if you look at a long-term chart of the Dow Transports, take a heavy felt tip pen, draw it across the number 15,000, and boy, the trannies just have been stuck there for more than 3 years. Yeah, interesting.
Wow, it certainly is. Well, how do the folks reach you, Stan? Do you have any more charts?
That's the last of my charts. I've got the contact info up on the screen, so if they wish to contact me, they're certainly free to do so.
All right, please do that. Read it off to the people who are in the car so they'll know, or in their planes, as most of our subscribers here have their own planes, as you know.
Yeah.
That's a little joke.
Well,
my friend Larry Williams, he's a couple years younger than me. He's learning to be a pilot now. I said, don't you have enough excitement in your life when wanting to be a pilot? He said, I always wanted to do it. I said, hey, go for it. Hey, listen, thanks for joining us, buddy. I really do appreciate you coming on, and you got some great stuff, and it's fun listening to you. Boy, you've been spot on about this rally because it blew the socks off everybody today, that's for sure. Really awesome.
My pleasure.
Okay, thank you, folks. That's Stan Harley of the Harley Stock Market Letter. We're going to take a little break here in just a moment. I don't know exactly the time on the wall because I don't have internet to do anything with, but we'll have to do it one at a time. I have no idea what time it is to go, so if you have any questions, it's 877-927-6648. I'm not going to be able to do the last part of the show because I don't have anything to say or anything to do, so what I'll do here is say goodbye now, and I'll see you tomorrow, and our guest tomorrow is going to be Jeff Hughes of Alpha Insights. And then on Friday, we're going to have Mike Moore of Moore Analytics is going to be our guest. So we have some nice guests coming up, and it'll be should be a whole lot of fun. So that's it for me today, folks. I'll see you tomorrow on the flip side. Bye-bye.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I just did a chart on the Dow Jones Transportation, and as a matter of fact, today's high was a 382, the high of last year, and it's down considerably from that opening morning foray or what it was buying, but it's down quite a bit from that level. All I do feel comfortable about is this gap that we have here in the S&P 500. It will be filled. That's in the cash because the cash wasn't open when that report came out, and bada bing, bada boom. But we've never had a gap this large in the S&P 500. So just be careful up in here. Always use stop and don't get involved with fundamentals, because unless you really understand them, and some people do, I happen to not be one of them. I just look at the charts. They served me well. Today was not one of those days, but that happens. I had a really we're up substantially on the week, folks. We booked $7,000 in the Dow Jones short that we were short for 10 days. We booked that on Monday, and anyway, that's the way it goes. Anyway, we did have 3 losses today. We had one in the Dow Jones, one in the gold and one in the treasury bonds. And that's just the way it is. But when you're into those reports, sometimes they work in your favor, like they did last Friday. Other times they don't. But you've got to stop in there and working, and you've got to get that stop working, because if you don't, it's really tough. And not only that, but the exchange makes rules on some of these things. So we haven't had a limit move, supposedly, which is 12% in many, many years. But one will be coming. They didn't put those rules in for no reason. But it'll probably be on the upside or the downside. But remember that fear is a greater emotion than greed. And that's the one that you've got to worry about more than anything else, because that's the one that could be really, really treacherous to you if you're not following it too well. Okay? So we'll see how